companies, entities, and/or organizations that may not be directly owned, managed, or controlled by the Real Estate Life. All credit decisions, including loan approval rate and APR, will vary based on your specific loan request and credit profile. The information provided on this show is merely to allow the listener the ability to become more familiar with such potential opportunities and to obtain more detailed information on the suitability of such opportunities to the listener's personal and financial situation from the companies, entities, and/or organizations involved.
A new home you've dreamt about for years, and there's only one thing standing in your way: getting a loan. Rest assured, United Mortgage Corporation of America is here to help make your dream a reality. Get answers, get results, get the service you deserve. What kind of loan do you have? Call now at 888-LIFE-980. That's 888-5433-980. Or go to the web at yourrealestatelife.com and take action today.
Welcome to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, mortgage loan originator 233410 with United Mortgage Corporation of America, NMLS 3189. I've been assisting in lending process for nearly 4 decades. Good morning. We're here every weekend talking to you about what's happening in real estate, financing, and your money so you can make informed decisions. And it matters. Every decision matters. And I want you to make the best decision. We're here on Fox Sports Ventura, 1590 AM, 97.9 FM, KVTA. We're on YouTube at Your Real Estate Life with Michael Harris. We're bringing you information to help navigate you through today's markets. Now, this weekend, Easter weekend, Passover weekend, we're sitting here talking to you, and we're going to be here on K-Earth 101 this weekend, but we're going to take summer and we're going to take spring off for our Sunday audience. But you can catch our programs right on our website. You can catch them at yourrealestatelife.com. You can also catch them at unitedforloans.com. That's unitedforloans.com. When you go to the site, you're going to be able to gain that information. You can actually stream at kvta.com. Now, this weekend actually is our Ventura show. So we're going to say goodbye for a short time to our K-Earth audience who will be joining us on this station, but also, as I said, on our YouTube channel and on our website. But if you want to get involved, 888-543-3980. That's 888-543-3980. Now, today's program, perfect timing, tax time tension. Who's got it? What your return means for you and your mortgage. You know, a lot of things. Now, we talk about the idea that everyone's going, oh gosh, you know, my taxes, I'll file an extension. But if you owe, you still got to pay because you're going to owe interest. So we're right in the middle of tax season. Deadlines are approaching. Filings are happening. We got, just right now, we just had our property taxes. They were late as of like yesterday. So you had to make sure to get that done. So check up on that. Make sure your lender did send out your impound money probably sometime in the month of March. So your April statement should reflect that disbursement. Be sure that's going on. Sometimes it doesn't update yet with the county. So make sure you look at your statement from your lender online or as you would get in the mail. Some of you are getting refunds. And, that's great, but you sent too much money. Or, you lent money to the government for zero interest. So thank you so much. So you need to look at your adjustments and make sure you don't get too much back and you had your money during the year. You don't need a forced savings plan that pays you zero interest. So that's a number one item there for those of you getting a refund. If you're writing a check, hopefully it's a small one. You planned it correctly. If it's a large one, you might have some issues there with some estimateds and some penalties and some small items. So get with your tax professional on that and make sure you get that set up right. This past week, I was talking to some individuals who are just getting into home ownership. They're just getting into the complexities of their job. And they've always been doing their tax returns as simple by themselves. And I go, you got to be careful about that because, you think a professional is expensive, but try hiring an amateur, including yourself. So it may cost you a lot more money. So you want to make sure you're making those right decisions, especially during tax time. But your tax returns are always right till someone says they're wrong. But when you're leaving money on the table, that's another eye opener. So you don't want to actually do that. Now, when we're looking at some other returns, it's interesting because the returns really don't quite reflect what's actually going on and what you earn. You may think they do, But a lot of times you have a lot of income perhaps, and then you have legal deductions. So your tax returns may not show a lot of money. How did you survive the year? Well, again, some of them are paper write-offs, some of them are deductions and expenses after you take your income. So we look at that. So that's why we talk about tax time tension and your return means for your mortgage. Now, the core truth about this is we look at buying a home. We look at either refinancing. We look at accessing equity. We look at investing in other real estate. But it's not really just your tax returns that are telling the story. But here's where the tension really begins. The tax system rewards you for lowering your taxable income. It rewards you for that because you pay less. But the mortgage system evaluates you based on your reported income. So you got this little yin and yang tug of war thing going on. Two goals, they don't always align. Now look in the real world. Let's paint a picture. You have someone who's self-employed. They generate strong revenue. Have a great year. The CPA does a fantastic job. They talk about legally and properly and helping you deducting expenses, reducing your taxable income, and minimizing your tax liability. You're happy, but now you're looking to get a loan. Now that was a smart decision by lowering your taxable income and doing that. But now you've got low income on your tax return, your 1040s. Now, some of you might have 1065s, partnership returns, 1120s, corporate returns, and other items that go into the picture. But what are you going to do now to qualify for your mortgage? The lower number isn't always going to work because we got principal, interest, taxes, insurance, HOA, possible car loans, personal loans, student loans, credit cards. You got to have a good debt to income ratio. Now, generally speaking, in the past, it's been 38%. There are programs now you can get up to 50%. So take all those items monthly, times it by 2, times it by 12 then, that's what we need on annual income. Well, gosh, it's not showing that because you paid less in taxes legally. So this is where it comes in. We look at cash flow, structure, timing. We're looking at all these items. So now we're looking at bank statements. We're looking at cash flow. There are loans what are called non-qualified mortgages outside of the box of Fannie Mae, Freddie Mac, Ginnie Mae for government lending that we can do and look at cash flow. Yes, you have deductions, but we have revenue going in. Every single month, we can look at 3 months, 6 months, 12 months, 24 months bank statements, business, personal. But we need to show the ins and the outs because a lot of times, oh gosh, I transferred this to that. Well, we need to show the in to the out to understand that we're not double dipping. We're not counting it twice. Just in the same respect, if you have expenses, car payments and others that you deduct from the business, we don't want to hit it on the business net of the inflow on tax return or bank statement, and then count it against you on your personal as well, because then we're hitting a car twice if it's being paid by the business. So we're going to show that history of showing it paid by the business to gain that legal deduction. So we're looking at all of these items. Now, when I talked about cash flow, structure, timing, and loan selection, that goes back into what I talk about a lot here, the Money Max program, a perfect financial GPS. Now, people usually will call me and ask, what's your rate? Now, interest rate, it's a number. It depends on how that's being paid and when it's being paid that it's important. So sometimes 3% may not be as good as 6% or 7% because it's how it's set up. If it's amortized, you pay a lot of interest early. If it's simple interest, that is your rate because it's level. So there's different ways to set up a loan that makes a difference, and it's not always the number. And I've had this conversation with many of my clients, and many of my clients are doing so much better because they're not looking at the rate, but they're looking at how to utilize the timing to actually eliminate the debt and actually have an even lower effective rate. Now, it sounds very complicated, but it doesn't have to be. Let's get you involved. 888-543-3980. That's 888-543-3980. When you call that number, I want to know what is happening. What is going on with your real estate life? I want to understand if you just are getting started, maybe you're renting, your landlord loves you and you don't need that kind of love in your life. Now, maybe you have a loan already, but your lender loves you. You don't need that kind of love in your life either. Let's get it right. I want to make sure your journey is a perfect one for you. And it's understanding what your journey is. Are you getting started, adding to your portfolio, downsizing? What is it and where is it that you want to achieve? Many of our listeners, 55 and over, have looked at reverse mortgages, whether it's a first mortgage or a reverse second mortgage, not requiring a monthly payment. Yeah, very interesting. Love to talk to you about that. See your equity position, run the numbers, and see what makes sense. We have others that are looking at home equity lines of credit, a HELOC, not a HEMLOC, but HELOC. We're looking at those loans as interest only, simple interest options that allow you to save money and really do well with your timing. So it's all about interest rate. It's about interest volume. So I like to show you that difference and how they compare. But interest volume is the total amount of interest you're going to pay over the life of the loan, over time, on all your balances, and moving the needle to your side of the ledger. I'm Mike Harris. Thank you for joining me. We'll be back right after this break.
Your equity position has started to improve? Call about the removal of your private mortgage insurance or mortgage insurance premium and save money today. Call 888-5433-980.
Today's mortgage lending can feel intimidating, frustrating, and at times even unfair. But understanding the players and your options is the first step toward taking control. Who is Fannie Mae, FNMA, Freddie Mac, FHLNC, and Ginnie Mae, GNMA? What is a non-QM loan, and could it be the right fit for you? Should you explore a reverse mortgage or home equity line of credit, HELOC? These aren't just letters, they're building blocks of your financial strategy. Your Real Estate Life with Michael Harris on YouTube simplifies the process. Each week, as President and CEO of United Mortgage Corporation of America, Michael breaks it down, sets the table, and helps you find the solution that fits your goals. Call now, 888-543-3980. That's 888-543-3980. Or visit and start the process at unitedforloans.com. That's unitedforloans.com.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. I'm glad to be here on the weekends. We're here on KVTA out here in Ventura. It's our Saturday edition here at 9 a.m. We're here every single weekend. Sounds like I'm on a sentence here, but so maybe occasionally we get out on parole. But thank you for joining us. Our YouTube audience, of course, is joining us at Your Real Estate Life with Michael Harris, and they're all over the United States. We just broke into some conversation regarding the Money Max account, and I do help people nationwide. And in doing that, we're showing people how they could eliminate potentially a third or a half of the interest that they pay, eliminate all their debt in that time, possibly even 5 to 7 years. It's possible. We've had individuals go from 26 years down to 7 years, actually being debt-free. It's amazing. And we're not putting you on some diet, not beanies and weenies, and we're not sitting here starving you. We're sitting here not changing your lifestyle and giving you the ability to utilize math that you don't have to go learn, because the opportunity is going to show you how that's done and do that with you and for you. And it's going to give you the ability to have someone not touch your money, move your money, but let you know exactly what you should be doing with that money and when and what you should be paying extra based upon your discretionary ins and outs. We talk about ins and outs. We talk about the monthly, the quarterly, the semi-annual, and the annual items. These items are your inflow and also your outflow. It's understanding the big items, the big ticket items, but also the reoccurring items that happen every month. Your gas, water, power, electric, grocery bill, gas bill, all those fun things. But we want to understand those. It works with fixed income, variable income, income that can change. We can actually work that and it pivots right away. It could add a 0.1 or take away a 0.2, depending upon what's going on. Now some, hey, what happens if I get my annual bonus? Well, gosh, if I put it in there, isn't it just going to spend it? No. It's going to look at it as a one-time occurrence, not necessarily just dumping it in, because it knows and understands based on how it's being set up, which I assist, it's going to allow your comfort zone, how much money you want at the end of the day so you can sleep at night in your checking or savings or money behind you. It's going to look to build up that reserve to make sure that you're comfortable. Now, some people like, oh, I want 100,000. Well, some people it's 2,000. Some people it's less. Depending on your inflow and the consistency of your income, that money sits idle. And that idle money is not earning money for you. Now, we will talk about people who put it into a checking account earning 0.1. Maybe you should be earning 3 or 4 or 5%. Maybe you should be earning even more. Depending on the liquidity and the need, it's not tying it up for 3 years, 5 years, and oh gosh, I can't touch it. I don't want you to have that stress. So we talk about ways to make that other money. Perhaps maybe you have that interest income coming in that's going to pay this bill and that bill as a result of that idle funds earning money for you. Just like this morning, I opened up my email and all of a sudden, one of my credit cards, oh my gosh, you got an extra $100. You got an extra $5. All of a sudden, I have money that I can spend at that place. Of course, they want you to come in and spend more. But if I have over $100, I don't think I'm spending possibly that much. Maybe I am. But possibly that gives me $100 of goods and services that I can use. And right away, my mind's going. And of course, this is their option and thought. They want you to go on and buy a bunch of things you didn't think you wanted to buy. And I understand you have to have discipline. But all of a sudden, that extra 100 and change put me on a different side of the ledger. I was using a card that I'm paying off monthly. I don't owe them interest, but I'm gaining more money from them to do other items that it's taking care of, whether it's groceries or this or that. I mean, I went to use one of my cards and I went to the grocery store, and then all of a sudden I go to the gas station and all of a sudden I had 80 cents off a gallon. 80 cents a gallon. Now, when you're filling a car up for 12, 15, 16 gallons and you're looking at 80 cents, it adds up. An extra 20 bucks or whatever it is, 15 bucks, whatever it is. But all these things matter. Every dime, every penny, every quarter, every dollar, every whatever. And I want to show you how that can be utilized to reduce your interest footprint, your interest volume. It's about your household items. It's your reality check-in point for your personal finances. Yes, I'm a mortgage banker. Yes, I help you leverage and gain your home ownership. But I also want to show you how to eliminate that debt in the most responsible way possible. You know, when's the last time you actually have gone in your car, opened your glove compartment? Yeah, that item on the right that maybe you haven't been into for a little while. You know, remember it used to have road maps in it? You used to pull it out and pull out a road map and you had to figure out how to fold it back up and put it back in the plastic. Remember that day? Yeah. It might be still in there. You may haven't been there too often. But we don't necessarily use road maps. We gone to the GPS system, but we used to have various other methods, various other brands and various other things where we actually looked at things, MapQuest, and we looked at various things, Thomas Guides and all that. But the thing is, they didn't necessarily update and change unless you went on a computer. Now you get this thing that updates, and if you make the wrong turn, it says recalculate, and gets you back on path. Why not have that for your finances and have a perfect decisionary item with no emotion and feeling telling you perfectly what to do and giving you that advice that you can listen or not? You know, it's someone smarter in the room than both you and me and many others combined that doesn't talk back to you. Sounds really good, doesn't it? And personally, I took 26.4 years that I was doing on my own down to 12.3. I thought I was pretty smart. When I looked at this opportunity, yeah, I had skepticism. I was looking at it. I understood all the principles. It's a question of being able to apply all of them and doing it in a timeline that I have available. So in plugging everything in, understanding what would need to be done, being shown how to do, as I would with you, I took 12.3 years on my own down to 7.9. 7.9 years. Now, it doesn't sound sexy, 4.4 years difference. It was over $100,000. I don't know about you. I'll take $100,000 any given day. Why not? Take it twice on Sunday, right? Let's get this done together. I've shown people to save mega money bigger than that because of their holdings, their complexities of what they have. The more properties, the more items, the more debt, the more things, it's saving you more money because more decisions are being made that perhaps you were not able to make personally yourself. Even those who just have a mortgage, a car payment, or even some credit cards, it's saving money. Now, you don't have to own a home to utilize this perfect financial GPS. I've taken individuals who had 15 years of debt, not mortgage debt, but had car loans, maybe student loans, some credit cards, and we've taken it down to 3 point some odd years. We've made a difference. Let me show you how that's done. It's not get in the line that everyone else has been in, doing what everyone else has done. There's better ways. You see technology changing. You're getting ahead of the curve in many things. Why not actually catch up with your finances? Looking at envelopes and spreadsheets and all these things, it may work for you. Maybe index cards, it works for you. But let's get even more efficient, and maybe you do that as your backup. But I want to save you time. This actually saves you a lot of time. It gives you the time to do the things that you want to do. 888-543-3980. Now on Tuesday mornings at 8 a.m. and Tuesday afternoons at 4 p.m. here on the West Coast, we have a webinar that goes into this for 1 hour. It's a webinar that you don't have to be on camera. You don't have to put your name up. You don't have to do anything and participate, but you can listen and watch. It's going to be a PowerPoint presentation showing you how this works and how it may work for you. Now, it's not you that we're going over, but it's the concept. So what I like to do, have you either go to that or go to that after you meet with me. But I want you to set up a conversation. I want to know where you are and what your goals are and what we can do perhaps to assist. So to do that, send me an email, interest@aheadformoney.com, interest@aheadformoney.com. When you send me that email, I'm going to send you the information for the invite for Tuesday. But I'm also going to send you my calendar. I'm also going to send you a few links to watch to get a little bit more familiar, and then look to have your opinion. If you want to set a calendar appointment with me prior, then get a kind of a recount of it on Tuesday, great. Or go Tuesday, see what you think, maybe schedule a time with me or give me a call. 888-543-3980. But we're going to look at the income, the expenses, your debt, and integrate these items to a perfect financial GPS to give you efficiency, and look to pay these off in a much more effective manner. Now, again, it's looking at all the inflows. It's not spending every dime you got. So if you say, oh gosh, I have 100,000 over here, it's not going to go write a check for 100,000 and pay off this and that. No, because it's not going to leave you in that vulnerable position. But it's evaluating all these items. You know, some of you kind of play around a little bit now with either Claude, ChatGPT, Perplexity, and all these other different things. And you find out that some of them are better at this and some are better at that, and some will give you the good general answers, and then you have to ask the right prompts. This is giving all the input that we put of everything going on with your personal finances. So we will use a budget. We'll put together, as I said, the monthly, the quarterly, the semi-annual, and the annual items. We'll input those items to a budget. Yes, some of them change monthly. Yes, it's $20 or then it's $27, but we put that average number. When that item comes up and that bill comes in, if the bill is 122 instead of 105, we change the 105 to 122 and we execute and do that. And the program understands the monthly budgeting and moves with it. It's not as concrete because it moves with you based on those expenditures. This past month, and the end of March, I had a gentleman who is utilizing the program, and he doesn't necessarily, I guess, itemize every single item like a check register. So what he does is he has a category, uncategorized items, where he has a budget number. Based on that budget number, he has like a total. And then when those items come up, he just subtracts from that. And by the end of the month, that number should be used. So in this case, he had an extra $314. So he calls me up. What do I do? I got an extra $314. I don't know what to do. I don't want it to be looking like coming out of my checking account. What do I do? Now, again, we don't touch, and the program does not touch your money. But that $314 was there. So it was a matter of changing some of the budgeting, and really quickly, I called them up because I also gave them our customer service line because I was explaining it. But I said, if you call, then they will share screen. They'll show you. So I got back with him, and he says, oh my God, it was an easy couple buttons I pushed and it was done. Great. I want you to be comfortable with working your personal finances. The fact that everything you have will be protected, log-inable for you and your family and those you care about to share that password with, user and pass. But your name, your account numbers, your personal information is not shown. It's a complex personal finance budget item that anyone who looks at it has no idea. It just looks pretty complex and interesting, but they have no idea in how to attach it to you. But you can use this effectively to run your household and your finances and have a place where everything will be, rather than running around with yellow stickies on your behind looking for everything at any given point in time, not knowing and understanding. This is a real game changer. 888-543-3980. That's 888-543-3980. You can reduce your interest footprint, your interest volume dramatically, making your mortgage rate not what you should be looking at. We have individuals who keep a higher rate. We pay it off and so darn fast, the effective rate ends up being lower than the market rate. So we are saving money. I want to show you how that's done. 888-543-3980. Lower the cost of your borrowing. Use it as a tax strategy. If you're saving money on taxes, but you can gain a mortgage through bank statements, other methods, this is your solution. You're going to win on all sides. I want to reduce your interest over time. Join us again on Tuesday, 8 a.m. or 4 p.m. Pacific time. Send me an email, interest@aheadformoney.com. Valuable information for those who attend or set up an appointment with me. I'm going to send you out information to attend, but also some items to watch in my calendar. Call us at any time, 888-543-3980. That's 888-543-3980. Our radio website is yourrealestatelife.com. If you're getting started on the mortgage journey, whether it's a reverse mortgage, home equity line of credit, possibly what is called a debt service coverage ratio loan, DSCR, another abbreviation. Those loans can be done as investment properties. I'm licensed in 46 states. For primary loans, forward or reverse, I'm licensed in 5: California, Colorado, Montana, Texas, and the state of Washington. Now, I do refer business in other states to other colleagues and people that I know who could do a good job. Just recently, we closed a loan in Tennessee, another one in Florida that I did. But the DSCR loans I can do in those states, but also on the other side of the fence, I can refer those to proper individuals that I know get the job done. 888-543-3980. That's 888-543-3980. Now, the economic calendar is something I always look at because we got a lot of hiccups going on and decisions that are made nationwide that affect mortgage rates, bond market, and various demands. We've had all the tensions and items going on, let alone the tax tensions. We've had tensions going on causing oil to go higher. Now, with oil going higher, we've seen a lot of things going on with inflation. We've seen the bond market react, interest rates rise. We saw things with a 5 in the front for the first time earlier in the year. Now we're back in the mid 6s. So we can perhaps get a little bit lower. I've closed loans now about 6 1/8, and I'm actually subsidizing some of that as well through my company, which I own, and I'm putting that through and getting you that lower delivery. Now we're looking at perhaps these tensions will kind of subside a little bit. We'll come back a little bit. Maybe we'll still be somewhere in those with a 6 number. Maybe we see a high 5 somewhere. Maybe it activates certain individuals for purchasing. But right now it's refinance for a reason. Set up that home equity line of credit as a backup. Look at a reverse mortgage to eliminate that monthly debt. Pay off other debt by not having the need to pay a first mortgage. Now on a reverse, you will be paying your taxes, insurance, and HOA. Keep the upkeep of the property, of course. But let's go back to the economic calendar. Now on Monday, the 13th, no major reports, but the market's kind of positioning still. We're expecting a kind of stable rate movement, but kind of a cautious tone as it's been. Now on Tuesday, we have the consumer price index. Now this is an inflationary report. Now, if it's higher, it may cause rates to rise. If it's lower, we may see rates improve. Sounds like we're sitting here three bears. If it's in the middle, it's just right. So we're kind of watching that carefully to see the general trend as we start the early part of the week. Where it's important, we have clients that are getting started, clients are in the middle, looking to lock a loan, looking to close, and we're making that right decision not to leave money on the table. So it's very important when we look at these numbers that come out usually in the morning hours. Now on Wednesday, April 15th, it's tax day. Or did you file your extension? Did you file the taxes? You got your electronic receipt or the receipt that went out that you had to mail it in? Make sure, cover that. You got to be ahead of that, please. I don't want you to have that problem. Woulda, coulda, shoulda. Now we have retail sales coming out. We have core retail sales. Now this measures consumer strength. Now strong spending, inflation pressure, higher rates. If we have weaker spending, cooling economy, potential rate relief. So we're watching this carefully. Right now, when we're looking at the Fed odds, we're seeing that they were kind of level, not going down, not going up. And of lately, it's been about 1 to 3% that the rates are going to go up. So now all of a sudden, rates are looking to go up, not down on the Fed watch. So I think there's going to be about one move down this year. And I think it's a lot of nothing in between. But there's going to be, oh, gee, it's this, it's that. And we got a new Fed chair coming in May. So that's right after the April 29th meeting. So a meeting, new Fed chair. 6 weeks later, after that meeting, we have our next. So we're going to see the general idea because there's pressure for the Fed to go down, but we got to get everything happening. Perhaps the war and everything else is going to be solved, and then all of a sudden rates could fall. We'll see. But we're going to be looking at that. Thursday, jobless claims. We have the Philadelphia Fed Index, labor data driving the market sentiment. And Friday, housing starts, building permits, consumer sentiment, housing supply remains a major issue. Now, looking at this as a market strategy, we're looking at three things. We are looking at inflation, consumer strength, employment, the drive, and what drives mortgage rates, affordability, and timing decisions. We're going to go deeper into self-employed borrowers in our next segment. We're going to talk about the tax return and the rest of the story. We're going to look at what we can do to correct and gain what you can do. Give us a call, 888-543-3980. I'm Mike Harris. We'll have more right after this break.
Looking for a place to start? United for Loans is the place for you to start your refinance or purchase process today. Call 888-543-3980.
Lending can be a bit confusing. Numbers can be tossed from one direction to another. How can you make it all stop? United Mortgage Corporation of America, UnitedForLoans.com can be your guide. Call directly at 888-543-3980 for what you need to know when financing a home of your dreams or commercial property. Call now at 888-543-3980 or visit at UnitedForLoans.com. That's 888-543-3980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, President and CEO of United Mortgage Corporation of America, mortgage loan originator 233-410. Sorry about that. And United Mortgage Corporation of America, NMLS 3189. Now, our radio website is yourrealestatelife.com. You can get started at unitedforloans.com, unitedforloans.com. Now, you're listening to us today on Your Real Estate Life on Fox Sports, Ventura, 1590 AM, 97.9 FM. And our K-Earth audience is going to be on hiatus for spring and summer at this point, but they're going to be listening at kvta.com on Saturdays and also going to our website where we'll be posting the audio. But we also have our video content live recorded in some cases when you're watching. But it's going to be our program there on our YouTube channel. Michael Harris, and it's our YouTube channel, Your Real Estate Life. So like and subscribe. I would appreciate that. But you can call us at any time at 888-543-3980. Today's topic, denied, delayed, confused loan approval, was what we did last week. This week, we're talking about tax tensions. So 888-543-3980. Now, we talked about navigating your personal finances, navigating correctly. It's understanding how these items can get done more effectively, because you're probably doing a decent job, but you could do a fantastic job. And it doesn't take a lot to do so. Now, a lot of times people say, oh, what is this going to cost me? Well, what's it costing you not to? That's what I like to look at. Because if it's not helping you, I don't care if it's $1, it's too much money. But if I can show you that something is actually going to improve your position, eliminate your debt, not change your lifestyle, wouldn't you want to find out more? I think you would. And if it actually takes care of itself within a month, 2, 3, and actually starts exponentially improving your position that much faster, it is a curious item to watch and see. And, well, gee, that's not for me. It won't work for me. Okay, well, take a look. Maybe you'll learn just a little bit, and it actually helps you doing what you do. And I did my job helping you a little further down the road. And we've had individuals who started or tried, and then they come back, and then they end up being part of what I'm doing at a later date. And if it takes a little bit longer, that's fine. But I want to make sure you're there. Just recently, I had a young lady who had given me a call, and she had called me about a year or so ago. And she was looking to buy. Things got a little delayed. Things were going on in her life. So she calls me or texts me and got back with me because I was staying in touch. And she's ready to go. Fantastic. So she's looking at a property that's going to close maybe in May. And there are programs and other lenders. Oh my gosh, there's other lenders. Yeah, there are. And some of them have different incentives because as banks, they have certain areas that they need to do lending in order to meet certain criteria. So they may have various grants or items that they're granting and giving. So in this case, I'm confident in my program and what I'm going to do and delivering the right results when I'm comparing apples to apples. But in this case, we had that orange or that banana that was a little different. They had this incentive money. But what they're doing, it actually comes out fine for her. But what they're doing is they're raising the rate to gain back money that then they can give to her. Now, in lending, raising the rate to get money, there's a point where it gets too much rate because not enough money is coming. Because no one wants to own that loan unless you're owning that loan and servicing it yourself, perhaps as this bank would do. But gaining, let's say, $20,000 towards the purchase that could be used towards closing costs, I don't want her to buy the rate down, and I'll explain why. But closing costs, down payment, she was already putting 25% down. Good amount. Now she could put down a little less than 25, and that 20 makes up the difference. Or she puts down 25 and an extra little amount, depending on actually paying the insurance and closing costs, escrow, title, and all those fun things. They're not restricting her to pay it back. It's money that she gets. If her rate is being bought up to just under 7%, and let's say I was able to obtain a no-point loan at 6 1/8, it's a lot of difference. The monthly difference is not going to be 20,000. She has the ability in 3, 4, 5, 6, 7, whatever amount of months after she purchases to redo the loan. As I said, no point 6 1/8, rates may come down, who knows? But let's say it's 6 1/8. So going from just under 7 to 6 1/8 and then pocketing that 20 grand to get her into the property and perhaps give her, I said, go get the money. Okay, as much as I want to write a loan today, I'll be here 6 months from now, 3 months, whenever that is. And we have that relationship. But giving the right information, the right answers, the right advice is what I do and what I'm about. If it's the right decision, I'm going to let you know. from my perspective. I'm also going to tell you if it's not. There needs to be a net tangible benefit, but I don't care if someone puts 20 grand on the table, I'm going to figure out a way to go get it. And in this case, it works. It works. So I'm going to look for every grant, every money, every free item. I'm putting up 40 basis points back into majority of my loans for your benefit. Depending on your loan size, it could be a lot. We're working right now with a first-time home buyer based upon where they're buying and the grants and their income. I'm giving an extra almost 1.75 benefit in fee to their loan. That's massive. That's equivalent to 3/8 to a half in the rate. I look for every single penny. I spend my money the way you should be spending yours, sparingly. I want value from my money, and so should you. I'm looking for every single item and every rock that I can unchurn to find every single dollar that I can put back into your pocket. That's the work that I do and our team does at United Mortgage Corporation of America. UnitedForLoans.com, UnitedForLoans.com. If you're not feeling you're getting that kind of representation, make it stop. If you can call us, 888-543-3980, I will look at your loan disclosure if you're going through the process. Now, if I get a closing disclosure, it already happened. I don't want to say woulda, coulda, shoulda, because someone says, hey, did I do a good job? What am I going to do? Say no? I mean, well, you did the best you could based on the circumstances, based on market condition. Maybe we can look at something else in the future. Okay. I mean, what do you want me to do? But if I'm in the process and you're halfway through or just starting, I'll tell you if it's a good deal. If it's exactly what you should be doing, you're getting it done. You got a relationship. Let's preserve that relationship. I'm not having you switch teams. If you want to, that's fine, but I'm not trying to do that. I just want you to be confident. My goal is to help you sleep better at night. If that's changing teams, that's great. If it's staying with where you are and having confidence that they're doing a good job, that's fantastic. There's a lot of good mortgage loan originators out there. There's also ones that are thinking they're good, but they don't know what they're not getting or finding. And I want to make sure you're getting that right representation. Because just like in tax time, you got some CPAs, some tax preparers, enrolled agents. Maybe they just go through the motions. Maybe they're leaving money on the table. I want to find every bit of it for you. I love numbers. I put them in the middle of my desk. Some people push them off to the left or the right and they fall off the desk. And some corporate positions, they push them off. If they don't come back, they weren't that important. I tackle those numbers, save you that money, come up with the options, and then ask you what your decision is based upon those choices. I don't want to be somebody making decisions for you, but I want to give you clear options that you have. The GPS program, Financial GPS, is going to give you those choices. You don't have to listen. But if you were driving down a 50-mile, 2-lane highway and you had no navigation device and you see everyone waving at you and you're wondering why. So now you're on mile 46 and the bridge is out. Holy crap. You got to make a U-turn. My gosh, what are you going to do? Wouldn't you like to know? I want to get that information to you. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. We'll have more after the break.
I work all day, sweat the same, and we break our backs for what? Money!
Get pre-approved for your home purchase. Your landlord loves you. You're making their mortgage payment. Own for less than you pay for rent. Call 888-5433-980.
How many times have you looked back and said, why didn't I act? Do not try to navigate lending without a map. Michael Harris, President and CEO of United Mortgage Corporation of America, addresses what should I do? Buy, refinance, sell, or hold? Your real estate life with Michael Harris on YouTube simplifies the process. Visit UnitedForLoans.com or call 888-543-3980. That's 888-543-3980. Or visit at yourrealestatelife.com or start at UnitedForLoans.com.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Money, money, money.
Welcome back to Your Real Estate Life. It's your day in real estate radio. It's our final segment of the day. Boy, time goes by quickly. A lot of calls, a lot of information coming in. People are looking to join us on our Tuesday morning, 8 a.m. or 4 p.m. webinar. That webinar is going to explain to you a perfect financial GPS program, how it may work better for you in your personal plan. I'd like to talk to you about that as well. Give us a call, 888-543-3980. That's 888-543-3980. Now you're listening on Fox Sports Ventura, 1590 AM, 97.9 FM, right here. And our K-Earth audience, so we're going to be on hiatus just for a little bit here in spring and summer. A lot of things going on for me on Sundays. We have a lot of appointments, a lot of items happening, and it gets a little bit more difficult to handle. But we are on YouTube, Michael Harris, Your Real Estate Life, and you can catch our programs there. So our audience is adjusting. We will have some ad space there just to let everyone know there that I still exist. I've been doing this for 20 years on the radio, and just under 40 years now on lending side. So I've been doing a lot for quite some time. It's a commitment every single weekend for 20 years, and doing that in lending, and taking just the spring and summer just to concentrate on a few items and utilize social media as well. But we've been talking about tax time. We've been talking about some of the deadlines. With last week, we all celebrated the fact we had Passover, we had Easter, we're spending time with families, and now we're concentrating also now tax deadlines and various items, property taxes that were due. Yesterday we got income taxes, we got possible extensions, and all these fun things going on, right? Fun, real fun. But we're looking at how those monies shape up. We're looking at the self-employed, the 1099, the business owner, the investor. We're looking at W-2 employees. We're looking at overtime and bonuses and consistency, multiple jobs, gig jobs. We're looking at net income, and we're looking at cash flows. We're looking at money that you write off. But let's look at an example. We have a $250,000 gross revenue individual after deductions, maybe $120,000. The lender uses, let's say, that $120,000 plus. All of a sudden, you're saying, I made $250,000. Well, no, you're showing $120,000. Now, that variable item is going to change the loan size, the approval, and the various options. But we look at bank statements instead of tax returns, 12, 24 months. We look at total deposits. We look at the business versus personal accounts. We look at consistency. We look at trends. We're going to analyze those items to come up with those numbers, the average deposits. We're going to explore and look at the expense ratios. We're going to look maybe a letter from the CPA stating that their expense ratio isn't as high as what a lender may default to. So these items matter. We're going to determine the qualifying income. The key benefits, we're not relying on the tax return. We're taking personal and real cash flow. We're looking at deductions. Ideal for this is heavy deductions that you're taking on your business, showing less income, paying less in taxes, but being able to qualify still for a loan. These items matter. Working where you are and what you're looking to achieve this year, next year, maybe in the years to come, is important on your tax setup. DSCR loans, I mentioned that, debt service coverage ratio loans. The property is covering the property's obligation. It's not so much as about your tax return. It's about the rent offsetting the principal, interest, taxes, insurance, and overhead of the property. So we look at that. Simple. Rental income plus property debt. If the ratio works, we can lend. So we're looking at rent, actual or market, depending on appraisal. We're looking at the mortgage payment and taxes. We're looking at the insurance, possible HOA. We're looking at no personal income required in many of these cases. We are looking at credit score. That does make a difference a bit, showing credit and payment responsibility. Now, investors with multiple properties, self-employed borrowers, high write-off clients are utilizing this product and program. But it's up to me to listen to understand where your needs are. It's very strategic. We're looking to maximize your returns, looking at minimizing taxes, continuing with investment, and growing your wealth. Now, when we talked about the Money Max program, it's about eliminating debt so we can create wealth. So that's what we're all about here. It's making the right decisions for the right time. It's looking at what you can still qualify for after you file those taxes. Understanding if you paid a little less, you might pay a little bit more, but then I want to show you how you can pay a little bit less again by utilizing money properly. It's setting up the payment plan, documenting things, having consistency, doing the things right that maybe you don't have to go live in every single day because it's going to be provided for you. A perfect financial GPS. Last segment, we were talking about that 50-mile 2-lane highway. You're on mile 46, the bridge is out, you make a U-turn. Now you're ticked off already. You wasted a lot of time, just like you do when you handle a lot of your finances. You're on your way back the other way, so you can go the other way to get around this. Now, 4 or 5 miles going the opposite way again, 40 miles to go. You start waving to people too, letting them know what's going on. But you were too ticked off for the first 5 miles to start waving. Now you're going, But now they don't know what's going on either. Unless they have a GPS, they would have already turned around, wouldn't they? Maybe they live close by. I don't know. But we want to make sure your decisions are maximized for you. Your income, your taxes, your debt, your cash flow. It's making sure your tax strategy matches your personal goals of what you want to do. We don't want your money sitting idle. We want it earning the most it can and being put to work properly to have more income coming in for you. We want the most minimum impact to your finances with the most impact to eliminating interest. We want to optimize all of it. We want to position and have a good strategy. We want to reduce balances faster, lower the interest volume, the interest that you pay. It's not just your rate. It's the interest you're covering over that time. Now, people are getting refunds. And again, thank you for lending money to the government at 0% interest all year. But what are you going to do with it? You're going to reduce debt, increase your reserves, maybe buy that little fun thing. Well, maybe that's not the smart thing to do, right? But position yourself for approval or an item that you want to do or can do. And I talk about it when you need something, you can't get it. So when you don't need it, you should set up that possibility. And we've been doing a lot of home equity lines of credit for our clients. And it's not just trying to get expenses to them and have them spend money, but it's putting reserves there. If they need it, they can spend it. And if they don't need it, they can use it, rinse and repeat, and pay down amortized debt with simple interest and actually eliminate debt even faster. And that's what I want to show you on Tuesdays, 8 a.m. or 4 p.m. Pacific time. Send me an email, interest@aheadformoney.com, aheadformoney.com, and I want to give you access. That access is going to get you incredible information for 1 hour. You don't have to be on camera. You don't have to put your name there. That's fine. Love to know that you're coming. I'd get you out the info. But I want to get you out some links to watch so you can get a little bit more exposure, but also my calendar if you want to set up a one-on-one so we can find out what it could do for you, not what it's doing for everyone else. 888-543-3980. That's 888-543-3980. Because it's about reducing your interest footprint, reducing your debt. And that's what it's all about. We're looking at income to qualify. We're looking at strategy and opportunity. And that's really what we do here on Your Real Estate Life. We position you in a better spot to borrow more effectively, pay less, and get more. It's not just getting you a loan. I gave the example. There's more money somewhere else. Get that money and let's go ahead and fix it. But it's going to cost you less. I mentioned to her on the phone, I said, boy, it's like I was so proud because that's something I would do. And not everyone's thinking that way. The fact that she shared that information on something that she had was very valuable because she actually then trusted that what I would do and say, and I did that because that's what I'm about. The fact that she came back to me and we had that conversation, I've waited a year or 6 months more. It's not going to hurt me. I'm here. I don't need to write a loan that's not as good for her with there's money on the table. So I will look for the grants. I'll look for the programs. I'll look for the median incomes and all those fun little things that I can do to help you save money. Even me tossing in credits from the lender side. I'm all about that. But if there's something that exists that I can't get, let's get it. Let's get it together. I'll be that bird on the shoulder, giving you perfect advice, not necessarily using licensed advice, but I will go ahead and give you that information, bless that item. Let's get it done together. Let's save you money. I'm here to help you on the personal side as a certified financial field trainer for the Money Max program. I'd love to be here to help you through that process. If you're a mortgage professional, insurance professional, CPA, divorce professional, trying to figure out how to divide the assets and the value of the debt, I'd like to show you how you can utilize this to help you and your clients succeed. Give me an opportunity to speak with you. Give me a call, 888-543-3980, because I want you to attend another meeting on a Thursday or meet with me, and I can show you how you can utilize this with your clients, not mine, your clients, in order to do better, eliminate their debt, provide opportunity for them, whether it's financial planning, doing things through life insurance, or other methods, eliminating their interest footprint, dividing debt on a divorce. If someone values the debt differently than the other, huge information. Give us a call, 888-543-3980. You've been listening to Your Real Estate Life, where we talk about life, finances, and your real estate. And I'm Michael Harris, reminding you, your real estate life, your financial future starts with the right plan. Real estate decisions aren't just financial ones, they're personal. They shape where families grow, where memories are made, and how legacies are built. Stability matters. Caution has purpose. Planning creates confidence, and flexibility protects the people you love. Thank you for listening. We'll be back next week with an exciting program. What kind of loan do you have?
United Mortgage Corporation of America, UnitedForLoans.com will continue to take your calls after the program. Call now to start your home loan process at 888-5433-90.
One other item I wanted to mention, real estate success isn't built on guessing. It's built on preparation. Just like you go through a year, you file the tax returns and you see how your year went, and maybe it's the way you thought, maybe it's less, maybe it's more. We want to make sure your numbers matter and you gain more money on your side of the ledger. Join me on Tuesday. Send me an email, interest@aheadformoney.com. I'll get you out some info. No obligation, just good information. I'm Mike Harris. Until next week, what kind of loan do you have?